You were listening to chartingwealth.com for Wednesday, the 8th of June, 2016. Let's jump right into things. We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. What do we see going on there? Well, we first see that we're going to redraw our trend line. For those of you listening on audio, we have redrawn our trend line for the ending candle on the 7th of June. We have the prior candle on the 3rd of June, and then the one before that on the 1st of June. We actually saw our first movement up after a long down move on the 24th of May. And since then, we have had 6 up two-day candles. Those are green open box candles, which are the strongest of the Heikin Ashi type candlesticks that we have. If you've not already listened to our training, you need to go to the website chartingwealth.com and cover that training of the Heikin Ashi candlesticks. We had a crossover on our MACD on the 1st of June. Prior to that, we had a crossover on our derivative oscillator. The MACD is the moving average convergence divergence indicator. It's our biggest indicator. Again, more training at the website on that and why we use it. It is a great type of indicator. We love it the most. It's typically the most accurate we find, and when it doesn't work, we don't use it. We're not professional traders in the fact that we're not on Wall Street. We want to be professional in our actions, but we're not required to trade every day. We trade when the charts tell us to trade. We buy when the charts tell us to buy. We sell when the charts tell us to sell. And we saw this crossover going up back on the 1st of June. What have we seen happen since then? We've seen the market continue to move up on the two-day chart. For the record, the charts were up for the total market 0.16% for the day on the 7th of June. If we look back at our 4-hour charts, what do we see going on? Well, we see on the 7th, up movement in the morning and in the afternoon above the two-day trend line. We have been skirting along very close to what looked like a pullback for a couple of 2.5 days or so now. It has not occurred. We saw what looked like would be a crossover going down on the afternoon of Friday the 3rd. That did not happen. Then the 6th, we were awfully close, still are. Still don't have a pullback. That is a crossover going down on the 4-hour chart. We're still above the two-day trend line. We've seen some possible entry points using our Heikin Ashi candlesticks back on the morning and the afternoon of the 26th when we had red open box candles. Again, on the 1st of June, and again, those are the down points. The actual entry points would have been somewhere on the morning of the 27th, potentially, if we're going to use the Heikin Ashi candlesticks. And again, on the afternoon of the 1st of June. Again, on the morning of the 6th of June. Whenever we see these pullbacks, if we want to use the Heikin Ashi candlesticks, which a number of you have gotten very familiar with and really like. I like them so much more than regular candlesticks. If you don't know what I'm talking about, you need to go do our training online. You will get a lot out of it. And if you sign up for our newsletter at Charting Wealth, you will get how to read a stock chart, the video, plus you'll get the type of layout that we use at Charting Wealth from freestockcharts.com. So all you got to do is go sign up. You'll get the links to both of those. That is where we saw the market end. Again, continued up movement on the total market. Now let's go back to our two-day chart and I'll tell you what's happening there. On the S&P 500 as represented by SPY, which is a SPDR's S&P 500 Trust Series Exchange Traded Fund. What do we see going on there? Well, we're going to quickly redraw our candle, redraw on our candles the trend line. We had a crossover on the 1st of June, similar to the total market. We've continued to see up movement. Actually, before then, starting back on the 24th, we had green open box candles. Since then, we had a little bit of a tail on going down on the 24th, but since then our two-day candlesticks, except for a two-day spinning top on the 3rd of June, we've had up movement on the S&P 500. If we look back at our 4-hour chart, we were up 0.16% for the day. The total market was up the exact same amount. See up movement in the morning and the afternoon. We see open box green candles with wicks on top. Derivative oscillator is positive and growing. And again, we had close to a crossover on the afternoon of Friday the 3rd of June, but we did not have that happen. And again, a couple of entry points after the down movement on the morning and afternoon of the 26th. We had a possible entry point on the 27th, and then again on the afternoon of the 1st of June, back on Wednesday of last week. And then again on after the down movement in the morning on the 3rd, a possible entry point in the afternoon on Friday, continued up movement on Monday and Tuesday. Since then, you would have done pretty well jumping in on Friday afternoon. All right, still don't have an official pullback on the 4-hour chart for the MACD. All right, now let's go back to our 2-day chart. And we're going to lastly go to the Qs, which was down for the day. Now that's not showing on our 2-day chart what happened on the 2-day chart, since it's representing 2 days of movement on the Qs, is that it is a pullback, and what you have is an up wick. And of course, if it weren't for that pullback movement, then the up wick would not be as long as it is. It's not a super long wick anyway, but that's followed by the prior 2-day candle on the 3rd of June was actually an open box red candle. So we had a pullback on the Qs. Again, the candle itself represents 2 days. It's a green up candle. We do have a 2-day trend line. If we look on the 4-hour or half-day chart, what do we see? Well, of course, we had a crossover going down on the Qs back on the 3rd of June, and we have continued to see the Qs as far as the MACD, Qs tracking down on the MACD, pullback, spinning top at the end of the day, which again means indecision, still above the 2-day trend line, and we're in the negative on the derivative oscillator. So until we see movement going back up, we don't have an official entry point on the Qs for an up movement. In fact, what we have on the Qs is a long sideways slide starting from the 1st of June. And we really haven't had much up movement or down movement as far as the official candlesticks goes. And remember, Hinkin-Ashi in Japanese means average pace. That's what's so wonderful about these candlesticks, is they help you see the average pace and not to get confused by simply high open, close low. That's the Hinkin-Ashi is a different type of formula. And again, encourage you to listen to that, watch that video on the website Charting Wealth. So we have a confirmed down move on the short chart, waiting for a pullback if there is one. Well, the pullback to be over, and a confirmed up move on the short chart in order to get in and capture the up movement on the 2-day chart. So that is where we ended with our 3 indexes. Lastly, we're going to go to gold. What's going on with gold? Well, gold has not yet crossed over going up. It's still in a confirmed down move, but we do have 2 green up candles for the last 4 days of movement. Derivative oscillators losing energy, and it does look like the MACD is converging with the red signal line, but still pretty far apart. If we look at the 4-hour chart, what do we see? Well, we see the 4-hour chart has really just slidden sideways for the last 2 days or so. In fact, it's really closed, the candle closed somewhere around where the high was back on the 3rd. So not a lot of movement in gold. It is up on the 4-hour chart after crossing over, going up back on the 3rd. So we'll just continue to watch and see what we see on the 4-hour chart and particularly the 2-day chart. So again, up on the short chart, and still gold is confirmed down on the big chart. If it crosses back over going down, of course, on the short chart, we would potentially look at an entry if we had a nice clean down movement there. So that is where we ended the day on Tuesday as we go into Wednesday the 8th. It is always a pleasure bringing you this coverage. If you like what we do, hey, go to the website, chartingwealth.com, subscribe, get our daily podcasts. If you really want to help us out, go to iTunes, where you can find both our weekly video podcast and you can find our daily audio podcasts. Say something nice about us. Give us a 5-star rating. We really, really appreciate that. You can also follow us on Facebook, Twitter, Instagram, YouTube. We appreciate all of your support. Thanks so much for being with us. You have questions, problems, issues, concerns, go to the website, email us. Let us know what we can do for you. We'll try to provide that training at chartingwealth.com.